Hello traders, the title of the video is how to avoid top-down trading mistakes. Alright, so we are recording this video today because a YouTuber did ask me a specific question, and the question is how to deal with a situation where one has a sell setup on a higher time frame but buy setup on lower time frame. All right, that's a very interesting question. All right, so when we are talking about a top-down trading method, practically speaking, we use a three time frame: the setup time frame, the signal time frame, and the entry time frame. All right, so the question was that, okay, you are on your setup time frame, all right, and you see a bearish trading setup. So the first thing that is coming to your mind, which is okay, what am I? You see, all right, a bearish trading setup, okay? So it's clear-cut bearish trading setup on the higher time frame. So you are thinking to buy. Now you drop down to the signal time frame, and you see a buy signal, all right? Instead of seeing a bullish signal, you see, instead of seeing a bearish signal as we're expecting, you see a bullish signal instead. How do you handle that? That's a very interesting question. All right. So, if you have a bearish trading setup, this one example here, you can see that the trader will say, all right, you form a double top with a lower high. All right, it's not equal high, but lower high. Okay, you may say it's almost touching this one, this trailer here. So the monthly chart, it looks to me like a bearish setup. So probably below that trend line is now retested it. One of the reasons why sometimes a trader may see a bearish trading setup on the higher time frame and then a bullish trading signal on the signal time frame, or a bullish trading setup on the signal time frame, is because probably the candlestick bar on the higher time frame is not yet closed. See this candlestick bar here? So the monthly candlestick bar, it looks like a doji. So people will try to apply the top-down trading method from the monthly chart prematurely, though the candlestick bar is not closed. It's a mistake. Whenever you are using any higher time frame for a trading setup, the candlestick bar must close. Because today is the 13th of March 2019, the candlestick bar is not closed. So if we go, for instance, on the daily chart, you can see it went down a little bit on the daily chart. All right, so you may say, though the candlestick bar is not closed, so some people managed to sell it here. Those traders that were selling here, they shouldn't be using the monthly chart as their trading setup. They should be using what? The weekly chart. But look at this. See, it's a very long candlestick bar. So as I say to traders, anytime you see a long candlestick bar, you want to sell near the median line of the long candlestick bar. So this is one of the reasons why sometimes you may see a bearish trading setup on a higher time frame, and you go to the signal time frame, you are seeing something that looks like bullish. Probably that candlestick bar on the certain time frame is not yet set. All right, okay? But there are times when you may see a bearish trading setup on a higher time frame, the candlestick bar will be closed, and then you go to the daily chart, there is nothing that is looking bearish. Well, if nothing is looking bearish, don't sell it. All right, don't sell it, because which means the signal is not yet ready. So the setup is in place, looking bearish on the setup time frame, but when you go to the signal time frame, there is no signal. So what you can do is to put that financial instrument on your watch list. You want to sell it, yes or no? You see a bearish trading setup. So that's the first choice. You may put that stock on your bearish watch list because you know that, yes, on the higher time frame we have a bearish trading setup, but on the signal time frame I can't see any bearish signal. Put it on your bearish watch list. Okay? But if you want to trade it, or you say, George, that's the only financial instrument that I trade. I trade only Dow Jones all the time, or I trade only the euro dollar all the time. I see a bearish trading setup, but on a daily chart, I see on the signal time frame, I see a bullish setup. All right? Suppose you are here, you say, George, okay, this is it. Now it's looking bullish. The common settle is broken on the daily chart. With this currency buys closed, I want to buy above the moving average 200. What you need to do is very simple, PMC LLC. If the setup is bearish and you go to the signal time frame, there is no signal to sell, but you have instead a signal to buy, you will use that signal to buy on the signal time frame as a new trading setup. So now you will start implementing a top-down trading method from the signal time frame downward. Am I making sense? So for instance, trying to breathe in and breathe out. So I may explain myself clearly. So you see bearish trading setup. Okay, all right, you go to the signal time frame, see George. I learned about the top-down trading method. Here it is. You see here, you were not here that time. Weekly chart traders, okay, showed it down. Now you are here, see it's a bullish now. What should I do? So as this currency is closed, it's bullish trading setup, not on a monthly chart, but on a daily chart, which is the signal time frame for the monthly chart. You use that bullish trading setup on the signal time frame as a new trading setup. So now you will talk about daily chart trading setup, hourly time frame for the signal, and then 10-minute time frame for the entry. That's how you're going to play it. All right. So if a trader is implementing a top-down trading method using a 3 time frames, Higgs also identifies, okay, a bearish trading setup on a higher time frame. But as the person goes to the signal time frame, one see the opposite signal. One can use that opposite signal as a trading setup, but one must implement a top-down trading method from that signal time frame. Is that clear for you? Any more questions? I want to keep it short. Are you advanced traders? You are? Okay. There are other traders there that are not advanced traders. So now that here we are, so that currency is closed. You see George, I see a bearish trading setup. Now it's bullish on the daily chart. But that's the only thing I want to trade. I'm desperate to trade only this. So now we have a trading setup after this currency bar is closed. All right. Now we go to the hourly time frame looking for our signal. Hold on, please. All right. So which day was that? That was the 11th of March 2019. So we go to a new signal time frame, which is the hourly time frame. The hourly time frame is the signal time frame for the daily chart. So you are using your signal time frame for the monthly chart as a trading setup. You are using the hourly time frame as the new signal time frame. 11. So 11th of March. So 11th of March, this is it. We have this price action. That was the bullish currency bar that we see on the daily chart. So now you come on the hourly time frame. You want to enter the trend. So it's not very clean signal. You can put a line at the high of that 11th of March daily chart candlestick bar. Press a line at the high and also a line at the low. That's correct. You get it right. You will also draw a line at the median line. The best scenario will be on the 12th of March. We prefer a pullback because we want to buy. We want to see a pullback. There was no pullback here. You are looking for a signal on the hourly time frame. It's not very clear, this one. candlestick pattern trader can trade it because you see you have a doji and a bullish candlestick bar. Those two candlestick bar for candlestick pattern traders, this is a bullish candlestick signal for bullish candlestick bar traders, a doji and a bullish candlestick bar that close above it. After those two candlestick bar close on the hourly time frame, if you understand candlestick bar trading, you can participate in this trade, bringing it up before this pullback here. Otherwise, you will be waiting for a pullback. This is not easy here. So here it finally pulled back a bit. It's tricky because is he pulling back to which level is he? Anytime you see the price pull back like this, ask which level is he retesting. So you're retesting this zone here, you see, on the hourly time frame. So it's not bad place, you're retesting it because we want to pull back to a key level. All right, which day? On the 12th. So after that, hourly candlestick bar is closed here. This one is closed. Okay, retest the key level. This one starting, or after this one is closed. In fact, this one is closed. Okay, that's the 13th. It starts today. Yes, today. So see, pay attention to that trend line that I draw here. So it's not easy here. It's not very clean. Here it is. I'll move this along. Okay. So it's here on the 10-minute time frame. Now they're taking it up. So see. So after this one is closed on the 10-minute time frame, you watch it start going out. You may say, okay, I'll take a speculative trade using 10 pips, 15 pips. So you buy gently here and you hide your stop loss there. So what you have done, there is a bearish trending setup on a monthly chart, okay? But on a daily chart, we see a bullish trending setup. Now you are using the daily chart, bullish trending setup, and then you implement a top-down trading method. You are not selling now. You are just flowing with the price. You are using, okay, the bullish trending setup on the daily chart as a setup, and then you implement a top-down trading method, daily chart, hourly time frame, 10-minute time frame. Going up nicely here. So you may enter here gently. All right. So all in all, if you are implementing a top-down trading method, if you want to avoid a top-down trading method mistake, if you want to avoid multiple time frame trading method, you see the setup, you go to the signal time frame. Now you do not have a signal. You may put that stock on your bearish watch list and wait until there is a bearish trading setup. All right. But if you want to play, if you want to flow with the price, you will use what you see on the signal time frame. If it's a bullish trading setup, you use it as a new trading setup, and then you implement again a top-down trading method. So the top-down trading method is allowing us to flow with the price. So we are not fighting the price. So again, so you are using a daily chart signal as a setup. If you go to the hourly time frame and you see a bearish trading setup, you have to wait again before you. If you go to the hourly time frame, there is no signal to buy. You wait. You just put it again down. If you want to play it again, then you have to use the hourly time frame signal as a setup again, and then you're going to break it down. Hourly time frame, 10-minute time frame, 3-minute time frame. But all in all, it's better because the scenario what we are doing with the top-down trading method, there is a trend or a price move that is about to begin. And the origin of it is the setup. All right, it's the setup. So that's we can say a long-term trend. So in order to begin to participate in a trend, the medium-term trend, which is the signal time frame, must align with the long-term trend. So the signal time frame must align with the higher time frame. If not, use the signal time frame as a new setup. All in all, the signal time frame is a very important time frame when we are implementing a different time frame trading method. Does it align with the setup? If not, you wait. If not, use it as a setup on its own and then implement again the top-down trading method. That was an excellent question, how to deal with a situation where one has a sell setup on a higher time frame but a buy on lower time frame. The opposite is also true. You may see a bullish trading setup on a higher time frame, then you go to the signal time frame, you see a bearish trading setup. Well, put it on your bullish watch list and wait until you see the signal time frame aligning with the higher time frame. If not, use that signal time frame as a setup and then implement a different time frame trading method. Am I talking too much today? 15 minutes, not too bad. So this will conclude our discussion today about how to avoid top-down trading mistakes. If you have any question or suggestion, put in the comment section, and in due course, I will be recording another video to answer your specific question. For traders that are very new to the topic of a top-down trading method, just YouTube search the phrase Mastering Top-Down Trading Method by 24 Stock Trader, digit 2, digit 4 Stock Trader. And you will see a playlist of 5 videos that will help you to understand the top-down trading method. As always, the top-down trading method is simple, but it takes time before one can master it. So give yourself enough time, use a demo account, practice until you master it. The whole principle with the top-down trading method is aligning, a lower time frame with a medium term and a higher time frame, all converging together. The trend is about to begin. It will start from the lower time frame and then expand to the intermediate and a higher time frame. But the origin of the trend is always from the higher time frame, but it will start from the lower time frame. So we say, all right, this stock, we look at it, it looks bearish. It has a high chance to go down. So we go to the signal time frame, we want to see, is it going down now? This is about the signal. If it's going down now, we will have a signal on the signal time frame. Then we go to the entry time frame to enter the trade. By using the entry time frame, so we are using different level to, manage the risk. We are looking at the price from different angles. Even on this daily chart, some trader may say, George, it looks really, really bullish right now because I see an inverted head and shoulder chart pattern. Yes, but on the monthly chart, we can also say to traders that priority to bearish signal below that blue trend line, yes or no? A priority to bullish signal above it, and also watch out for the red trend line around there. If you find a support above the blue trend line, watch out for the red trend line. Will they bring it all the way up there? Most importantly, when you are using a trading setup, the candlestick bar on that time frame must close. This is also one of the reasons why sometimes they go to the signal time frame and they do not see the corresponding signal. Also, if you are implementing a top-down trading method, talking about how to avoid top-down trading mistake, there was a trading setup, good, and then the signal was in place on the signal time frame. You enter the trade, try doing all things that the price can do, and suddenly you go to the signal time frame, the signal fell. Close the trade immediately. So to manage your trade, you can go, you implement a top-down trading method, you see the setup, you see the signal, you enter the trade. As the price going up, you can monitor your trade. You see those people who enter here, they can monitor this trade on the signal time frame by drawing, for instance, a common trend line along this price move. Or they will see the first warning on the entry time frame that the common trend line is broken on the entry time frame, and then they will see also the signal time frame. They may say, all right, I better close this trade. But again, if you buy the price looking for resistance level, draw the resistance ahead, the trend line ahead, use market geometry, use Fibonacci extension and retracement, and know where are those resistance levels so you can manage your trade more efficiently. So this will conclude our discussion today about how to avoid top-down trading mistakes. Sometime this video will be posted at the 24 Stock Trader YouTube channel. So I'm posting video first, this video first on YouTube. Subscribe to our YouTube channel. It's 24 Stock Trader YouTube channel. Sometime I'm posting first on Facebook, especially Forex videos. I posted first on Facebook. My Facebook page is Stochastic-MACD. So this will conclude our discussion today about how to avoid top-down trading mistakes. Until the next time, enjoy yourself and be very happy. We are the GSTW24 traders talking about how to avoid top-down trading mistakes. We are recording this video today because a YouTuber did ask me a specific question, how to deal with a situation where one has a sell setup on a higher time frame, but a buy setup on a lower time frame. Happy trading to you all, and I will speak to you soon. Thank you for watching.